Inflation climbs higher than expected in June as the Consumer Price Index rises 5.4% from a year earlier, the largest jump since August 2008, just before the worst of the financial crisis. Almost everything from airline tickets to used cars, fresh fruit, and lumber has become more expensive over the past several months. If we were to take out volatile food and energy prices, the core CPI rose 4.5%, the sharpest move for that measure since September 1991 and well above the estimate of 3.8%. The index measures what consumers pay for goods and services, including clothes, groceries, restaurant meals, recreational activities, and vehicles. It increased a seasonally adjusted 0.9% in June from May, the largest one-month change since June 2008. Investors are concerned if this inflation is really temporary or the sight of the U.S. economy will be overheated. The arguments from Fed officials are this inflation is a temporary consequence of supply bottlenecks for raw materials and labor due to COVID-19 restrictions are lifted. Consumers are unleashed pent-up demand and businesses around the country gear up operations. According to Federal Reserve Chairman Jerome Powell, part of the temporary boost of the inflation rate is due to the sharp pandemic-related price declines from last spring, hence comparing the low prices at the height of the pandemic resulted in the inflation problem look worse than it actually is. Is the Fed running the U.S. economy too hot? Or it is just that the investors are not convinced by the Fed's explanation? Stocks fell on Friday, as Dow drops nearly 300 points, the stock market indexes fell into the red for the week. The fears of rising inflation outweighed strong retail sales data, despite big U.S. banks were reported better than expected quarterly earnings. Crude oil slumped to its biggest weekly loss as markets expected extra supplies from OPEC producers. The stronger dollar hurt the appeal of commodities price in the U.S. Even the 10-year U.S. Treasury yield fell to around 1.3%, did not reduce the massive stocks sold off. In such a market situation, many investors are looking for bargain shopping and look for chances to buy the dip. Here are 3 stocks that could be worth adding to your watch list. FuboTV is the stock that investors should pay attention to, due to the potential upside of 60% to 80%. Recently FuboTV pulled back from $34 to below $28 due to investors taking profits and the recent news that FuboTV has discontinued the A&E networks from its lineup. The recent of its chief financial officer to leave the company does have some negative impact on its stock price. However, if we look at the business fundamentals, we can see that the FuboTV business is still continuing to grow. For example, the recently added on Google TV that could benefit FuboTV to gain more subscribers. FuboTV also partnered with LG Electronics to include the FuboTV app into LG smart TVs. This is a good step for FuboTV to further expand its market into the streaming industry. The long-delayed Tokyo Olympics will take place between July 23 and August 8. It has been confirmed that the game will be going ahead despite the COVID-19 cases still high in Japan. FuboTV stands a great benefit as billions around the world will tune in to watch the events live, especially during the opening and closing ceremony. Japan has announced that the Olympic Games will not allow the public to attend the events as Japan has declared a state of emergency to curb COVID-19 infections. With the Olympic Games being a TV-only event, FuboTV will benefit and it will also be a good opportunity to grow its subscribers. FuboTV app will be on all LG smart TVs. This will further increase subscribers as LG smart TVs are very popular in the United States. In Q4 of this year, FuboTV will launch the Fubo Sportsbook for sport betting. This will bring a more inclusive, expansive, and integrated sports wagering product to turn passive viewers into active participants. Hence, the launch of Sportbook could grow FuboTV subscribers. Sportsbook will be a good revenue stream for FuboTV. The sport betting industry is projected to be $155 billion by 2024. In summary, with strong growth of subscribers, increasing app download count, new partnership, Tokyo Olympics, sports betting and more, Fubo definitely has great upside. FinTech stocks have grabbed the spotlight, as digital technology roils e-commerce, payment networks, online lending, and money transfers. Also, business-to-business payments, personal finance, and banking. Shopify, a hypergrowth stock that has provided investors with a more than 50 times return since its IPO 6 years ago. In 2004, Tobias Lutke and Scott Lake would like to build an online snowboard shop, but with a lack of user-friendly tools, they ended up only experiencing the frustrations. This disappointment becomes the inspiration for a better idea, Shopify. Lutke and Lake co-founded Shopify to make e-commerce easier. Driven by that mission, they have developed cloud-based software that provides a comprehensive solution. Its solution allowing sellers to start, run and grow their businesses across physical and digital channels. Shopify went public on May 21, 2015, and in its debut on the New York Stock Exchange, started trading at $28 per share. Today, Shopify stock is trading above $1,400, a gain of 5,000% in 6 years. Shopify seems with unlimited growth potential. Short-term investors and day traders love this stock. However, long-term investors are uncertain that whether the e-commerce growth can remain this robust, especially in post-pandemic when the foot traffics are back to pre-pandemic for brick-and-mortar shops. Would the demand for e-commerce still remain high and sustainable? The current consumer shopping habits are structural or temporary. Recently, Shopify announced that it has taken a $350 million position in Stripe, an emerging online payment processing platform. This creates a path for Shopify to go into FinTech business. The online payment platform could integrate into Shopify and the synergy will be huge for Shopify business. Shopify also partnering with Google and Facebook to enable them to better compete with Amazon. The multi-channel future of commerce is now going to make Shopify's merchant tools even more important, Shopify President Harley Finkelstein said. You now need to reconcile inventory across 8 or 9 channels. You now have to handle shipping and fulfillment across 8 or 9 channels. And so as the complexity increases, the value of using Shopify as the central retail operating system also increases. Shopify PE ratio as of July 16, 2021, is 112.81. Hence, the stock price is too pricey now. If you are a long-term investor, it may not be a good time to buy Shopify stock now. If you have bought Shopify stock when it was still cheap, you should continue to hold it. Square was founded in 2009 by Jack Dorsey and Jim McKelvey. Square was started by introducing the mobile card reader, a small dongle that allowed merchants to use their smartphones as point-of-sale systems and payment processing devices. Square has 2 distinct businesses. Before Cash App's success, Square had already made its mark supplying merchants with simple point-of-sale credit card systems and services. Square's seller ecosystem includes a range of hardware, software, and services that help merchants manage all aspects of their business, from payment processing and inventory to payroll and marketing. On November 19, 2015, Square went IPO on the New York Stock Exchange, started trading at $9 per share. Today, Square stock is trading above $230, a gain of 2,600% in 6 years. The company now processes card payments at an annualized rate of over $100 billion. Recently, Square has ventured into e-commerce platform tools by introducing Square Online, allowing merchants to create online stores that automatically sync with physical retail locations. Late in May, the company announced a new integration with Google Merchant Center. This allows Square sellers to reach new customers through direct product listings on Google. Square's Cash App business is expanding fast. Its active user base has doubled year over year. In 2018, Square has integrated Bitcoin into its Cash App, and last year, the company acquired Credit Karma Tax, adding a mobile-first tax filing solution to the Cash App. CEO Jack Dorsey said on the third quarter 2020 earnings call that he wants to make sure his company is expanding around the world in a smart way. Square's online store, the new and rapidly growing platform that helps Square's merchants build out an omnichannel presence. It also facilitates curbside pickup, which could be a major growth catalyst in the post-COVID world. Square's launch of its merchant solutions in France adds to the company's increasing focus on the European market. Last year, the company purchased a peer-to-peer company called Verse, which is in Spain, to learn more about how peer-to-peer works in the country. Both Shopify and Square stocks are almost going through the same path, but they are started and grow from the reverse direction. Shopify started with an online e-commerce store and now goes into payment processing. Square took the opposite path, started with payment processing and now venture into an online store. Both are highly potential stocks. In recent news, analysts quoted that buying Square stock is like buying JP Morgan in 1871, as an analyst believes that Square's Cash App could create disruption to the traditional bank systems and could possibly replace banks in the future. If you have missed Shopify, Square could be the option for you when the stock price is still cheap and affordable. This is not financial advice. Hope you enjoy watching this video. Please like and subscribe to the channel. See you in the next video. Thank you.